Hello traders, Gary Wagner here. It is 11:30 in Honolulu, 5:30 in New York on Wednesday, 10th day of August 2022, and this is the daily report for gold and silver. The release of today's CPI report for July coming in at 8.5% year on year created extreme volatility for gold and the dollar. Gold futures basis, the most active December contract, lost $4.30. That's a decline of about 0.25% and is currently fixed at $1,808. But that's only on the surface because it was definitely saved by a massive decline in the U.S. dollar. The dollar gave up 1.07% and is currently fixed at 105.11. We'll begin the show with some 5-minute charts on gold and the dollar to give you an indication of how volatile this morning's trading was. Lastly, silver did have a nice gain today of 0.4%, with the most active September contract currently fixed at $20.57. The release of today's CPI report created extreme volatility and some real knee-jerk reactions in both gold and the dollar. And in fact, there was heavy selling in gold. And if not for the 1% decline in the dollar, we would have seen gold sell off severely. The CPI report was released at 8:30, and that represents this long candle here. You can see that within the first 15 minutes of trading, gold actually hit its high of the day at around 1824, and then throughout the day went methodically lower with a couple of knee-jerk reactions here and here. We can see the same thing in the dollar. We saw extreme dynamics in the dollar index today, and if we look at the differential between today's high and low, it's almost a 2% swing, with the dollar closing down by just over 1%. What is most interesting is that we had the major decline come right after the release, but after a small bounce to the upside, it then traded to the low of the day, which came in at 104.515. A couple hours later, it would recover slightly and then trade sideways up until Globex and the time of this recording, which is approximately 6 o'clock in New York. The dollar experienced one of the stronger days in terms of selling pressure we have seen in a while. The differential between the high and the low today was almost 2%. Gold ended up closing down by just over 1%. It is expressed in a single candlestick as this red candle here. What is most noteworthy is the fact that since March of this year, the dollar has remained above its 50-day moving average, as you can see, but today not only did the dollar index trade below that, but it closed well below that, as I said, giving up 1.07%. Traders, we are looking at a daily chart of gold futures. Today can be expressed by this single candlestick here, and although it says that the current price is $1813.70, the actual price is $1808 as it trades in Globex. I've just put up the Kitco Gold Index to give you an idea of how much dollar weakness saved gold from selling off by double digits, $20 or more, because spot gold, when I took this screen print, was fixed at $1792.20, a net decline of $1.70. However, sellers in the market took gold down almost $20, $19.80 to be exact, but dollar weakness helped it recover $18.10 of that decline, resulting in only a fractional decline in gold today. This last chart we are looking at is a weekly chart of gold futures, and we looked at this yesterday and talked about the fact that this support line that gold broke below And again, the support line is created from simply fixing this low and this low here and extending it forward. If you look at the high that came in this week, it is but up against that support now resistance line. One thing I can say is that we could easily see the dollar decline over this next week to 2 weeks. On a technical basis, the fact that it closed below the 50-day moving average could be extremely significant, and I would expect to see a tug of war between dollar strength and weakness, as well as a tug of war between extreme selling in gold being compensated by dollar weakness. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.